Week in review. We're going to be looking at the trading week of November 24th, 2025. So we'll start it with data. It is a short week, so we'll get to that in a second, but we'll get that out of the way here. There isn't really too much to pay attention to. Monday, we have nothing. Tuesday, we have 8:30 a.m. PPI and retail sales, as well as 10 a.m. pending home sales. So I'm sure that PPI will have some sort of volatility in the pre-market. Wednesday, we have jobless claims at 8:30, and then on the schedule here, we have PCE and GDP, but it's still to be determined for the time. So I don't actually know when that's coming out, but it's usually at 8:30 a.m. So I guess we'll have to see if that gets released. 9:45 Chicago PMI. And that's about it for Wednesday. Thursday is a market holiday, so I believe the futures market is open until 1 p.m. as euros close. Not totally sure. I don't usually trade these days, but the equity markets are closed on Thursday, so volume on futures obviously will be very low into the closure of that session. And then we have a short day on Friday. Friday equity markets close at 1 p.m. Eastern time. So it'll be the same deal there. Again, volume will be very low on the future side of things, and no major data listed on Friday. So getting that out of the way, data, earnings, we don't have anything really. We're basically past all the big guys for the earnings season, which is good. So we don't really have any market moving risk events until really December FOMC at this point. So most of what we needed to get out of the way is out of the way. We have payrolls data out of the way. We do have PPI obviously coming out. We have GDP still set to come out probably next week. Who knows? But as far as the big risk events, there's not really much until December 10th, which is the next FOMC meeting. So with that being said, we might have some clear air. We might have some volatility crush. We might have a bit of time for realized vol to start coming down. And we'll see a little bit of potentially a little bit of relief in the market here would be my first thought, as well as how we closed on Friday and where we closed on Friday. I'm not totally sure we have a low end, but I think if we don't, we're very close for the short term. So just looking at this on higher time frames to start out, this is the 4-hour chart on the RTH time frame. This is not showing the extended hours, just to show you kind of like a higher level visual of where we're sitting. So the monthly time frame shifted to balance. The weekly time frame is one time framing lower, and the daily time frame is one time framing lower. So if we're looking at the 4-hour time frame right here, the big thing we were watching the last couple of weeks is the various weekly balance ranges that we had formed and how we were reacting around those ranges. So last week was pretty crazy. We had some pretty big outlier days, which I'll talk about in a minute. But the big thing to pay attention to, or the big thing I'm paying attention to right now, is the fact that we are back inside balance. So we found ourselves back inside this weekly October balance range that we had, down into the lows at 65.91s. You can see too that we touched the prior weekly balance range that we had down here at 65.40s, basically to the tick, and we found a low. This purple line is the 200 period moving average on the 4-hour chart, if you're wondering what that is. But from a higher time frame perspective, devoid of any profiles or order flow, etc., this is where we're sitting. So we found ourselves back in balance. So that's the first thing I'm going to focus on this week, is the fact that Friday's close was able to move us back inside balance. We didn't have any acceptance below this prior weekly balance range. We didn't have any initiation to get us below and get us continuing the sell down into the bottom range down here. So if we're looking at this a bit more granularly on the S&P 500, this is that level right there, so 65.92s. And you can see Thursday's liquidation was absolutely enormous. So what we've basically done is we had this huge liquidation come Thursday. Friday, we found ourselves into the bottom of the weekly balance range and the top of that prior weekly balance range, as well as August highs. So August highs are 65.20s, and that prior balance range as well was 65.40s, and we basically held that to the tick on Friday. So we're looking at stacked balances, stacked prior trading ranges, big high time frame trading ranges that basically dictate, larger swings in the market. So the big thing on Friday for me, obviously huge liquidation Thursday, Massive, massive outlier day, big gap up for NVIDIA earnings, and then sold the entire day, put in a new weekly low. Stats on a day like this are interesting because especially if you're looking at the NASDAQ end to end, we basically had 1,000 point sell. And the big thing about this, the big outlier about this is that this was actually a day that was twice the daily average ATR on a 14 rolling day basis. So why that's important is that from an average true range perspective, on a 14 rolling day, you can build out that average, and you can use that to basically look at the market and look at predictability of the market. So we were sitting at about a 500 point 14 day ATR, and we traveled basically 1,100 points in the day. Instance rates of basically doubling the 14-day ATR are extremely, extremely low. So in the last 10 years on the sample size, we're sitting at about 77 instances of that happening, so about 2.5% of the time. So this end-to-end sell happened in the last 10 years. Has happened 2.5% of the time, which is insane. So it's insane to think that a day like this that everybody obviously catches the entire move has a 2.5% instance rate in a 10-year sample. That's pretty wild. So the big thing early on is, can we hold back inside of this prior balance range? So pivots for me will be the pullback low from the afternoon pullback on Friday down into the POC of Friday, as well as last week's value area low. So basically using the range of 6,600 to 6580 to 6575. So down in here, this blue highlighted range. Early on, what I'd want to see if I'm a buyer down here is any attempts to sell below this are bought up quickly. If that's the case, I'm going to be looking for the long trades to get us back over Friday's high. This would change the daily to one time framing up. Or pardon me, this would change the daily back into balance, not one time framing up yet. This would take out the poor high. This would take out last week's POC if we can do that. And it would change the daily back to balance. The big thing for me here is that if we're above this 6670 area, if we're above this inside week low that we broke down from last week's POC as well, if we start to build value above this, it's going to be only longs for me, and I'm going to be looking for the moves back up into last week's high, RTH high, up here at 6791s. That would change the weekly back to balance, and then I'll be looking for the poor high at 6790s to get taken out and cleaned up as well, which is also the 20-day simple moving average. So early on, if we can't sell below 6600 to 6575s, I'll be looking for those long trades to get those rotations back up to Friday's high, as well as up into 6790s. Ultimately would be the end target for me. Back above 6790s, this is going back to all-time highs, in my opinion. If we change the weekly back to balance, we can start to build value back above 6790s. I don't see a reason why we don't take this out and clean up these highs up here. Whether or not we get that, I don't actually know. And again, obviously with higher time frames, one time framing down, we have to be cautious with looking for those bigger, longer rotations. But I think the big thing right now is that everything I'm looking at as far as, where we're sitting in this market currently, where we sat on Friday, I think we're probably either close. We either have a local low put in here, or we're very close to a local low to get put in here. The other possibility, obviously, too, is that we could punch below this. We could sweep out the ZTH low down into August highs, down at the bottom of balance, and we could sweep this and reclaim. And again, I'd stay on the long side. I'd flip short on this if we have a very clear initiative sell below last week's low. So if we basically are breaking below 6541s to 25s, if we're breaking below this with a lot of volume and a lot of violence on the tape, I'll be looking for those sells down into the mid of that prior balance range we were looking at, which I'll just come back here so you can see this visually. So below this, I'll be looking for the midpoint of that prior balance at 6450s, which is down in here. And then if it gets really bad, I'd be looking all the way down into 6300s. I don't think we're going to see that, personally. A lot of the bigger names, a lot of the mag names are sitting on really big supports right now. I don't really see a case for extended downside from here unless we have some sort of risk event or tail risk event that comes in. The options profiles as well look like they're more favorable to upside. We also have a short week, which generally speaking is more on the bullish side of things. Obviously, things can change very quickly, but I think the first sign, any indication of weakness will be starting to accept below this blue highlighted range right here. And then obviously you need to see last week's low really puke and have no bid bring it back up. So we'll see. if we come back in here and we start putting in decent lows, that might also happen in Globex. I'll be looking for those long trades to get us back up. And again, above 66.70s is only longs for me. And I'll be looking for the backfill of Thursday's value up into 67.50s, 67.70s, and then 67.90s up here. NASDAQ is the exact same thing. The range for me will be Friday's POC into 24 220s down into 24 180s. So I'm going to look at this the exact same way. If we're punching down into this range here, putting in decent lows, then again, I'll be on the long side looking for those rotations back up to Friday's high, which is also a poor high, as well as last week's POC at 750s, and then 25K, and ultimately back up into 25 300s. Same thing with NASDAQ. We also are sitting on a huge prior weekly balance range. We basically did the exact same thing on the NASDAQ that we did on the S&P. We came back into that prior balance range, held it, and then moved back up on Friday. Same idea here. If we start losing this range, so I think the first indication will be basically losing that 24 180s level down into 24, we'll call it 24K. If we start losing this, then we could puke pretty quickly down into 23 500s. But I think more so, again, what I'm really looking for probably early on is going to be those long trades to get us back up, especially backfill all of this poor structure that we have. The other thing to bear in mind as well on both indexes that we do have a neutral extreme up close day. So what that means is that we tested both sides of IB, broke away from one side. So in this case, we couldn't sell below IB. We were able to buy it above. We pulled back, held, and we closed the day outside of IB high. So neutral extreme days generally can indicate a change of direction or short-term direction in the market, and look for directional continuation on the way of the break. So that's not a hard and fast rule, but it's definitely something I'm paying attention to here amongst everything else that leads me to think that we could potentially have a short-term low. Net volume in the last two sessions is also extremely high. So we're looking at averaging over 2.5 million net on the S&P. Usually in these situations, especially if we're holding on bigger ranges, usually this can start to form lows. So big volume into the lows, good solid net volume above 2 million, especially above 2.5 million. We can start seeing decent lows start to form, hold those local lows for a little while. So hopefully that's the case here. Just to make this simple, I really don't think, at least in the short term, we have a lot more extended downside. Obviously, that view can be very wrong, and it would be wrong if we start accepting below last week's low. Obviously, lower highs, lower lows when we're coming to the daily and the weekly. But with that being said, I think the risk here to the downside after a 5% move in a couple of weeks that fast, especially with how these lows look with the amount of volume that we have, I think that's starting to erode, and I think we're more looking probably for some sort of relief. So we'll have to see. We'll have to see how this week goes. We don't have a lot of data, obviously short week as well, so it's going to be a little muddy with the sessions that we have, but I think hopefully we have some pretty easy areas to watch and some pretty areas to manage.